ASTS SpaceMobile is up 78% year-to-date, trading near $1.29 as of May 27. The company has not reported a profitable quarter. It has no recurring revenue base that justifies that magnitude of move on its own. So what is the market actually pricing? The answer begins on May 20, when SpaceX filed its S-1 registration statement with the SEC. The document framed a targeted valuation of approximately $1.75 trillion. SpaceX is private. Retail investors cannot buy it through a standard brokerage account. ASTS, Rocket Lab, and Planet Labs are the three listed names closest to that private story. On May 27, the day SpaceX's IPO roadshow captured renewed attention, ASTS surged 20% in a single session. Planet Labs gained 15%. Rocket Lab climbed 6%. That is not coincidence. That is a read-through trade. Investors who cannot access SpaceX pre-IPO are allocating to listed proxies as the next best entry. The unstated premise embedded in this trade is this, that SpaceX's private valuation legitimizes the entire space infrastructure category. Under that premise, ASTS at $1.29 is cheap relative to what a $1.75 trillion SpaceX implies about the sector's total addressable market. But there is a second premise being priced simultaneously by a different group. That premise holds that once SpaceX actually lists and becomes directly accessible, the capital currently parked in listed proxies will rotate out. XORV, the ETF that holds SpaceX directly, is down 2% year-to-date, while the S&P 500 is up 9%. Pre-IPO access vehicles have not captured the proxy premium that ASTS has. That divergence is the first signal worth tracking. If ASTS is rising because of SpaceX, why isn't the vehicle that literally holds SpaceX rising faster? The answer may be that ASTS isn't pricing SpaceX's story at all. It may be pricing its own story, with SpaceX as the catalyst that forced the sector into public view. The distinction matters for every holder of ASTS today, because the two stories imply opposite post-IPO outcomes. On May 30th, SpaceX was awarded a contract exceeding $4 billion from the U.S. Space Force. The headline number includes $2.29 billion for a satellite network under President Trump's Golden Dome missile defense project. This is the largest military satellite contract SpaceX has ever received. The work goes to Starlink's Starshield division, which already operates a secure government and military satellite network. Under the deal, SpaceX will build a constellation of low Earth orbit satellites called the Space Data Network Backbone. The program's stated purpose is to ensure that the Space Force's sensors and weapon systems are continuously, globally, and securely. The contract was issued under other transaction authorities, bypassing standard federal acquisition guidelines. That procurement route is faster, but has drawn oversight concerns from the Government Accountability Office. Now, here is what this means for ASTS specifically. The Golden Dome contract is a SpaceX contract, not an ASTS contract, but it validates a thesis that directly applies to ASTS's underlying commercial model. ASTS builds satellite-to-cell infrastructure, a direct-to-device network that connects standard mobile phones without ground-based towers. The Golden Dome contract confirms that low Earth orbit satellite connectivity is now a defense procurement priority, not just a commercial experiment. That changes the risk profile of the sector. Prior to this week, investors in ASTS were betting on commercial mobile carrier adoption. After this week, the defense revenue pathway is proven at scale, even if the dollars flow to SpaceX first. The unstated premise most analysts have not surfaced. The defense validation of low Earth orbit connectivity is treated as a SpaceX story, but it implicitly reprices the technology category. ASTS, as the only listed pure play in direct-to-cell LEO technology, absorbs that repricing through sector multiple expansion. The monitoring variable here is not ASTS's next earnings. It is whether the Pentagon's next contract tranche under Golden Dome names any listed satellite companies along SpaceX. That outcome would shift ASTS from proxy to direct participant, and the valuation framework would need to be rebuilt from scratch. On May 29th, Bloomberg ETF IQ reported that Nasdaq has instituted a rule change that shortens the time for newly public companies to be added to its index. The rule change is specifically timed to accommodate mega IPOs, including SpaceX, OpenAI, and Anthropic. S&P Dow Jones and FTSE Russell are considering parallel changes. This is not an administrative footnote. It is a structural shift in how index capital flows will treat the space sector. Under prior rules, SpaceX would spend months outside the Nasdaq 100 after its June 12th anticipated listing date. During that window, passive index funds would not be forced buyers of SpaceX. Active investors allocating to space could park capital in ASTS and RKLB as listed proxies without a forced rotation trigger. The new rule compresses that window. Once SpaceX enters the Nasdaq index on an accelerated timeline, index funds must buy it. To fund those purchases, portfolio managers must reduce other holdings. In a space-themed allocation, the most obvious reduction candidates are the existing listed proxies. This is the mechanism through which the sector legitimization story and the proxy exit story can both be true at the same time. ASTS benefits from the pre-IPO read-through premium while SpaceX remains private and outside the index. The same event that drives ASTS up today, SpaceX's $1.75 trillion IPO filing, contains the mechanism for forced selling of ASTS post-listing. The critical variable for ASTS holders is not the IPO date, it is the index inclusion date. The old framework assumed months of proxy runway. The new Nasdaq rule compresses that runway to an unknown shorter duration. If SpaceX enters the Nasdaq index within weeks of listing rather than months, the post-IPO proxy exit pressure arrives faster than most current ASTS holders have priced. The verification point to watch: Nasdaq's formal announcement of SpaceX's index inclusion timeline following the June 12th expected listing. That announcement is the event that resolves whether the 78% YTD gain in ASTS has a post-IPO floor or a post-IPO cliff. Every day after the close, we publish a market wrap and key issue analysis. Subscribe to the channel.